If you or your spouse is age 62 or older and you want to buy a house, but you don't want to tap your nest egg, this video's for you. Coming up right now on the Arizona Report. Welcome to the Arizona Report. My name is David Meek, Arizona real estate broker and editor of the ArizonaReport.com. HECM for purchase. This is a reverse mortgage that you may be familiar with. I have a guest in the studio today, Rochelle Hopkins with Retirement Funding Solutions. She's a HECM for purchase specialist. She's going to tell us how it works and how it will benefit you and how you can move into a new house with no mortgage payment. Rochelle, welcome to the Arizona Report.
Hi, David. Thank you so much for having me.
Yes. Well, in terms of the reverse mortgage, I think a lot of people have probably heard of the product. What exactly is a HECM for purchase loan?
So, David, the HECM for purchase was introduced in 2009.
Mm-hmm.
So, traditionally, whenever you go to purchase a home, you have two options how to buy that home. You can either put all cash down, not have a mortgage payment, or put a down payment and do the rest on a regular mortgage where you then are making a monthly mortgage payment. The HECM for purchase allows a third option. So with the HECM for purchase, you're going to put about 50% down, do the rest on a HECM, and not have a monthly mortgage payment for as long as you live in the home.
So this is kind of the sister of the reverse mortgage. Traditionally, people might think of a reverse mortgage where if you own a home, you can take cash out. This is that same program, but it is for purchasing a home. It's for buying a home. And, this is no longer the Wild West of reverse mortgages. People might think back to television commercials in the 1980s. The federal government stepped in and they regulated this product. This product is FHA insured, and you guys at Retirement Funding Solutions are the number one HECM for purchase lender in the United States, so you know what you're doing.
Yes. Actually, reverse mortgages have been around since the 1960s. FHA stepped up to the plate in the late 1980s to ensure the reverse mortgages, making it the formal home equity conversion mortgage. So, again, like you said, originally a reverse mortgage is where you own a home and you're able to tap into the equity without a mortgage payment. The HECM for purchase allows you to kind of take that same concept, but rather than already owning the home and tapping into that home equity with a HECM, you are now purchasing the property, putting your down payment in, and utilizing the additional equity with the HECM where you're still not making a mortgage payment.
So paint a picture for me, Rochelle. Who is the type of buyer that would use this product, and what kind of a position are they in?
So a couple scenarios. Let's say that the homeowners own a home up in Seattle and they're wanting to come and relocate to Phoenix for whatever reason that is.
They want to be closer to grandkids.
Absolutely. So they sell their home up in Seattle and they have cash that they're walking away with. Some of my clients can actually have enough cash where they're coming down to Phoenix and they're buying that home 100% cash with no mortgage payment. But the HECM for purchase allows them to put 50% down and do some retirement planning with that other 50% and still not have the mortgage payment.
And you don't, there is no mortgage payment. Now, it's elective. If I got a HECM for purchase loan, I could choose to make a payment here or there. Is that right?
Absolutely. That's the beautiful thing about it. You can treat it like a regular mortgage if you wanted to. You make a payment whenever you'd like, whatever amount you'd like, but you're never required to make that monthly mortgage payment. You can also pay it off at any time without a prepayment penalty.
That's important.
Absolutely. A lot of people think whenever you step into the HECM for purchase, you're kind of stuck with it, and that's not the case.
And you mentioned something in the pre-interview, Rochelle. You said this is a non-recourse loan. What does that mean?
So non-recourse loan, basically there's no personal liability to this loan. If at any point when the loan is due back, if the property value is lesser than the mortgage balance, that debt is dismissed because of the FHA insurance that's involved. So pretty much you can never go upside down on these
You're never going to be underwater with a HECM for purchase loan. Excellent. So walk me through what are the requirements. If someone's interested in doing this and purchasing a home with a HECM for purchase loan, what does that scenario look like? What are the requirements for that loan?
So at least one home buyer must be 62 years or older.
Okay.
So again, often actually, especially the boomers. One might be 62 or older, and then one might be younger. You can still qualify to do it.
Okay.
So age-based, the property that they're purchasing must be considered their primary residence.
Yeah, so no vacation homes, no investment properties. This has to be a home that you're living in, your primary residence.
Right. And
Okay.
many of my clients, they still have second homes, vacation homes, travel, whatever it is, as long as this is considered the primary residence.
That makes sense.
So qualifying age-based, it must be their primary residence, and they must have enough income to support whatever debt they might have reporting on their credit report.
Let's talk about that, because somebody 62 years or older might be retired and their source of income might be less than it was 10 years ago. Talk to me about credit, income requirements for qualifying for the HECM for purchase.
So we don't require a minimum credit score like a conventional mortgage might. What we're looking really at is that the income they have coming in is enough to satisfy not only their monthly revolving debt on their credit report, but property taxes and insurance and HOA fees that are involved. So at the end of the day, they're not required to make a monthly mortgage payment, but they are still required to maintain taxes and insurance on their property.
Fair enough. And pay their homeowners insurance or homeowners association
Right.
dues. So someone in this situation might have an investment advisor that says, wow, the stock market's doing great, your investments are going through the roof, but you want to move. You want to move across country, you want to move in town, but you don't want to tap that nest egg. This looks like a great solution, and not a lot of people know about this.
Absolutely. Most of my referrals actually come from financial advisors on this product. They're aware of the HECM for purchase, and rather than their client going to put dollar for dollar into that property, they put, again, about 50% down and help them with other planning and other retirement vehicles.
And the down payment, you shared with me a matrix of the required down payment for the HECM for purchase program. It depends on your age, and it depends on the purchase price of the home. So someone who's older puts down less than somebody who's probably 62, 63.
Correct, right.
Okay.
So there's actually three factors that we use to calculate that matrix that you looked at, David. Number one is age. The older the homeowner, the less of a down payment. So
Okay.
age-driven, number one. Number two, interest rates. We're still in a very conservative interest rate environment, although they are changing. So as rates go up, the down payment requirement is going to be greater than when rates are lower.
So just as a benchmark, today a 30-year fixed rate, no points, might be 4.625%. What would a HECM for purchase loan be for someone who qualifies?
It's right around a 5%.
Fair enough.
Again, our interest rate isn't driven by credit score like a conventional loan might be. We calculate that a little bit different on our end, but it's right about 5%.
Excellent. Rochelle, if somebody is interested in moving forward and they want to find out if they qualify and they want to talk to you about a couple of homes they have identified to use this HECM for purchase product on, how do they get a hold of you?
Thank you so much for asking, David. So my telephone number is 602-312-7801. My website is ihecm.com. That's IHECM.com. And as far as qualifying, we give a full underwritten vetted pre-approval before they go on their way for shopping for their home. And the whole closing process from the time they locate the home, it's within about 30 days. So pretty competitive out there.
Excellent. And I would encourage anybody watching this video to share the video with a family member or a real estate agent who's not sure at this point that there are options out there besides traditional financing and cash. There is the HECM for Purchase program for buyers who qualify who are over age 62. So, Rochelle, thank you very much for coming into the Arizona Report, and we'll have you back sometime to talk about your additional products. So,
Thank you, David, for having me.
thank you, Rochelle. I'm David Meek with the ArizonaReport.com. If you'd like to find out more about this product or my observations on the greater Phoenix metro real estate market, go to my website at ArizonaReport.com, or you can reach me here in the studio at 480-999-MOVE. That's 480-999-6683. Until next time, we'll see you.